when the top allocator in America says, I'm waiting, maybe you should ask, what am I waiting for? Because timing when you deploy capital matters as much as what you deploy it in. If you want to think like Buffett for a moment, with 382 billion, they could do a lot. I mean, in theory, they could buy a number of huge companies like McDonald's or T-Mobile that we talked about earlier, but in practice, there are major constraints. And that teaches you some important lessons. With that kind of money, you could buy many of the most iconic US companies, or a company like Toyota. It's not even a US company. You could use the cash to buy back Berkshire shares at an attractive price if you thought the stock was undervalued. I mean, they own insurance, manufacturing, railroads to grow organically. When you think about this huge amount of money, $382 billion, finding a company large enough but also at the right price would be really hard. In fact, it would be hard to just buy up all the stock of American Express, for instance, which they already own quite a bit of. Also, from a regulation standpoint, integration, execution, there's a lot of risk there, right? Like buying big means dealing with antitrust, cultural alignment, capital allocation issues. Also, Buffett's 95 years old, and he's already announced that in January of 2026, next year, he's going to be handing over the CEO role to Greg Abel. They're probably not going to want to just step in and right off the bat make a huge purchase. Also, valuations are high, right? Buffett is wanting to buy things that he sees as a bargain. And evidently, he's holding a lot of cash because he doesn't feel like he sees any bargains right now. And, Buffett's signal, what does it mean for the market? This is all perspective. I'm not a financial advisor, so you can't take this to the bank. But it seems like what Buffett is doing or not doing often sends a signal to the broader market, and you can use that to inform your own strategy. There's something called the Buffett indicator, which is the total US stock market cap divided by the total US GDP, or gross domestic product. And right now it's north of 220%, which is scary. Buffett has previously warned that above 200% is playing with fire, stocks like Nvidia. So Buffett's cash buildup suggests he doesn't see enough value opportunities at current prices. In fact, it might be really smart. You don't have to deploy cash just because you can. Could almost visualize it this way if you're a hunter. I'm not really a hunter, but one of my sons is. Buffett is like a hunter on a mountain with his rifle loaded and his scope zeroed in, but he hasn't pulled the trigger yet. Why? He's still waiting for the right deer in the right valley. And maybe you should be doing the same in your investing or your business strategy.